Gareth, obviously there will be those who've been around in the market a little while who will look at this and say, when you see this kind of red hot IPO market, it's very reminiscent of the top we had back in 2000. And when you look at some of the financial innovation around SPACs and these blank check companies, it also resonates with periods where we've had a lot of euphoria in markets. How concerned should we be, or how much would you temper enthusiasm at the moment around some of these new companies coming to market?
Look, there's no doubt in discussions with investors that there are shadows of 2000. There are no shortage of concerns on a macro basis, whether it's the US election, whether it's how Brexit plays out, whether it's the trade war story. So actually, I think there's a lot of mediating factors that investors are considering, which is leading to a fairly healthy level of skepticism in how they're approaching the market. And really, for me, this is an asset allocation story where in a world of low interest rate environment, equities are going to be compelling. And then when you look to the equity market, you're really looking for where are the most powerful narratives to place your money. And as it stands, and this was the same pre-COVID, it's been the same post-COVID, and you just look to secondary market performance, and with global tech running up 20 to 30%, what we're seeing in the primary market now, in my mind, is really a reflection of the secondary market performance that you're seeing, and investors looking to be selective, but really putting big bets on where they see demonstrable growth.
Clearly, we want to help our audience make money where possible in these new issues. At the moment, as you look at the performance, and I think as you quite rightly point out, in this search for growth, it is the technology and communications IPOs that have been doing best by a country mile. Does that trend continue, do you think, as long as we remain in this sort of low interest rate, low growth environment?
I think the answer to that is yes. We have a conducive IPO market, and you're seeing over $150 billion of issuance year to date. So this is actually quite a broad-based, large pool of capital that's being invested in this product. And again, to your point, as long as we're in this macro environment, investors will retain their selectivity, and they are being very clear in saying to us, we will buy through an IPO, we'll buy growth. We want relatively larger transactions. That's probably more a European phenomena than anywhere else, but that size is really a function of aftermarket liquidity that they're looking for a bit more comfort around. And thirdly, they're really looking for quality as well. So they are being selective around what they're looking for. And therefore, I think the companies coming to market are having to go through that screen. And therefore, you're seeing the winners come through at the end of that in terms of what's getting actually listed.
Is there anything exciting happening on the European exchanges in terms of IPO pipeline, Gareth? Because it seems increasingly you look to the Hong Kong market and the United States at the moment to give you the most exciting growth opportunities.
Look, there's no doubt, if you look at just pure secondary market performance, Europe and the UK are lagging on a global basis. The weighting of technology is lower and relatively more scarce in UK and Europe, and that's causing a lag. We're seeing that reflected again in the primary markets. What I would say on a positive note for Europe is there's no difference in the UK and Europe in terms of investor appetite and support for growth companies. You saw the HUT yesterday. UBS brought a number of technology companies, whether it's Software One, whether it's Avast, to market in this market over the last 18 months. They've gone very well. So really, from my perspective, the European market is no different in the makeup of it or the engagement from investors in it. It's just that we unfortunately have, at this point in the cycle, relatively fewer opportunities. The positive is, though, that those opportunities that are there are therefore scarcer and do command a lot of attention. And this is a good market here in Europe and the UK for technology companies to list. We just have relatively fewer than Asia and the US at this point in time.